If you are an immigrant living in the United States and you have not filed your taxes yet, stop everything you are doing and watch this video right now. Because the IRS is giving up to $8,046 in cash back to qualifying families this year, and most immigrants do not even know they are eligible. That is not a loan. That is not a trick. That is real money deposited directly into your bank account, and you could lose every single dollar of it if you do not file before April 15th. But here is what makes this even more urgent. In February 2026, a federal judge confirmed that the IRS illegally shared the taxpayer addresses of 47,289 people with ICE. So right now, immigrants across America are terrified. They are asking themselves, should I file my taxes or should I hide? And that fear is causing thousands of people to leave money on the table, money that is legally theirs. And worse, it is putting their green cards and their citizenship applications at risk. In this video, I'm going to show you the exact credits you qualify for, how much money you can get, what the IRS can and cannot share with ICE, and the 5 steps you need to take before April 15th. My name is Asim. This is USA Visa News, and this information could be worth thousands of dollars to you and your family. Let us get into it. Let me start with the biggest credit that most immigrants miss completely. It is called the Earned Income Tax Credit, or EITC. This is a refundable tax credit, which means that even if you owe $0 in taxes, the IRS will send you the money directly. It goes into your bank account or comes as a check. For the 2025 tax year, which is what you are filing right now before April 15th, 2026, the maximum EITC amounts are as follows. If you have no qualifying children, the maximum credit is $649. If you have one qualifying child, the maximum credit is $4,328. If you have 2 qualifying children, the maximum credit is $7,152. And if you have 3 or more qualifying children, the maximum credit is $8,046. $8,046. That is more than many people earn in 2 months. And it is sitting there waiting for you, but only if you file. Now, who qualifies? You must have earned income, meaning you worked and received wages, salary, or self-employment income during 2025. Your adjusted gross income must be below certain limits. For a married couple filing jointly with 3 or more children, the income limit is $68,675. For a single filer with 3 children, it is $61,555. Your investment income must be below $11,950. And here is the critical part for immigrants. You must be a U.S. citizen or a resident alien for the entire tax year. That means if you have a green card, you qualify. If you were physically present in the U.S. for at least 183 days and meet the substantial presence test, you qualify. If you are on an H-1B visa and classified as a resident alien for tax purposes, you may qualify. But if you are on a non-resident alien status, you do not qualify for the EITC unless you are married filing jointly with a U.S. citizen or resident alien spouse. The second major credit is the child tax credit. For the 2025 tax year, the maximum child tax credit is $2,200 per qualifying child. That is up from $2,000 the previous year. Up to $1,700 of that is refundable through the additional child tax credit, which means even if you owe no taxes, you can still get up to $1,700 per child deposited into your account. But there is a major change this year that every immigrant needs to know about. The one big beautiful bill that was signed into law now requires a Social Security number to claim the child tax credit. If both parents file with ITINs, individual taxpayer identification numbers, you can no longer claim the child tax credit starting with the 2025 tax year. The child must also have a valid Social Security number. This is a significant change from previous years when ITIN holders could claim the credit. However, if you are a green card holder or you have work authorization and a Social Security number, this does not affect you. You can still claim the full $2,200 per child. Now let me add these numbers together so you can see the real picture. If you are a married green card holder couple with 3 children and your income is below the limit, you could receive up to $8,046 from the EITC, plus $6,600 from the child tax credit, which is $2,200 times 3 children. That is a combined total of up to $14,646 in tax credits, and a large portion of that is refundable, meaning it goes directly to you as cash. Let me now talk about the credit that is destroying people's immigration cases without them even knowing about it. It is called the FBAR, the Foreign Bank Account Report. If you are a green card holder, a U.S. citizen, or a resident alien, and you had foreign financial accounts, bank accounts, investment accounts, pension accounts, even a joint account with a family member in another country, and the combined total of all those accounts exceeded $10,000 at any point during 2025, you are required to file an FBAR, also known as FinCEN Form 114. The penalty for not filing this form, even if it was an honest mistake, is up to $16,536 per violation for non-willful failure to file. And for willful violations, the penalty jumps to $100,000, or 50% of the account balance, whichever is greater. But here is what most people do not know. USCIS now checks your tax compliance when you apply for citizenship. When you submit Form N-400 for naturalization, USCIS reviews your tax returns. If they find that you had foreign accounts and did not file the FBAR, it can be used against you in your good moral character evaluation. The new USCIS policy memorandum from August 2025 expanded the good moral character review to look at the totality of your conduct, including tax compliance. Missing FBAR filings can lead to citizenship denial, and it gets worse. On February 26, 2026, a federal judge confirmed that the IRS shared the taxpayer addresses of 47,289 immigrants with ICE. The judge found that the IRS broke the law approximately 42,695 times in making these disclosures. ICE had requested the addresses, and the IRS sent them without proper verification. Now, multiple federal judges have since blocked the IRS from continuing to share data with ICE. As of today, there are court orders in place prohibiting this data sharing. But the damage was already done for those 47,289 people, and the legal battle is ongoing. So what does this mean for you? Should you be afraid to file your taxes? Absolutely not, and here is why. Number 1. Not filing your taxes is far more dangerous than filing. If you do not file, you lose thousands of dollars in credits. You also create a gap in your tax record that USCIS will see when you apply for a green card renewal or citizenship. USCIS asks for 5 years of tax returns on the N-400 application. A missing year is a red flag. Number 2. Filing your taxes actually protects your immigration status. It shows you are a law-abiding, contributing member of society. It strengthens your good moral character argument for naturalization. It provides documentation that supports your case. Number 3. The IRS has a legal obligation to protect taxpayer information under Section 6103 of the Internal Revenue Code. The courts have already ruled that the data sharing with ICE was illegal. While the system is not perfect, the legal protections exist and are being enforced. Number 4. If you file with an ITIN and you are undocumented, your tax return still cannot legally be shared with ICE for enforcement purposes. The court orders specifically block this. Now let me tell you the 5 steps you need to take before April 15th. Step 1. File your federal tax return. If your income is $69,000 or less, you can use the IRS VITA program, which stands for Volunteer Income Tax Assistance. This is completely free. Trained volunteers will prepare your tax return at no cost. Go to irs.gov and search for VITA to find a location near you. If your adjusted gross income is $89,000 or less, you can use IRS Free File at irs.gov/freefile. This gives you access to free tax preparation software. Do not pay someone hundreds of dollars to file a simple return when free options exist. Step 2. Claim every credit you are eligible for. Check if you qualify for the EITC. Check if you qualify for the child tax credit. Check the Savers credit if you contributed to a retirement account. Check the American Opportunity Tax Credit, or the Lifetime Learning Credit if you or your children are in college. Many immigrants leave credits unclaimed because they do not know about them. Step 3. File your FBAR if required. If your foreign accounts exceeded $10,000 at any point in 2025, file FinCEN Form 114 electronically through the BSA e-filing system at bsaefiling.fincen.treasures.gov. The deadline for FBAR is April 15th, with an automatic extension to October 15th. But do not wait. File it now. Step 4. If you cannot file by April 15th, File for an extension. Use IRS Form 4868 to get an automatic 6-month extension to October 15, 2026. But understand that an extension to file is not an extension to pay. If you owe taxes, you must still pay by April 15th to avoid penalties and interest. The late filing penalty is 5% per month of your unpaid taxes, up to a maximum of 25%. The late payment penalty is 0.5% per month, and if you file more than 60 days late, the minimum penalty is $525. Step 5. Keep copies of everything. Print or save your tax return, your W-2s, your 1099s, your FBAR confirmation, and any receipts for credits you claimed. Store them for at least 7 years. You will need them for your green card renewal, your citizenship application, and in case of an IRS audit. Now let me give you 3 bonus tips that almost nobody talks about. Bonus tip 1. If you are a green card holder and you traveled outside the United States for an extended period, you are still required to file U.S. taxes on your worldwide income. The IRS does not care where you earned the money. If you are a resident alien, all income from all sources everywhere in the world must be reported. Many green card holders travel to their home countries, earn income there, and forget to report it. This is a ticking time bomb for your immigration case. Bonus tip 2. There is a hidden checkbox on the 2025 IRS Form 1040 that immigration attorneys are warning about. It asks about your foreign accounts and foreign financial interests. If you check the wrong box or leave it blank when you should have checked yes, it creates an inconsistency that USCIS can find during your naturalization interview. Be honest and accurate on every line of your tax return. Bonus tip 3. If you have not filed taxes for previous years, do not panic. The IRS has programs to help you catch up. You can file back taxes for previous years. In most cases, if you voluntarily come forward and file, the penalties are much lower than if the IRS comes after you. Talk to a tax professional or use the VITA program for help. Let me bring this together with the most important point of this entire video. April 15th is 5 days away. After that date, you lose your chance to file on time. You lose your chance to avoid penalties, and you potentially leave thousands of dollars in tax credits sitting on the table. If you are a green card holder with 3 children and you qualify for the EITC, you could receive up to $8,046. Add the child tax credit, and that number could be over $14,000. That money could pay your rent for months. It could pay for your children's school supplies. It could pay for an immigration attorney to help with your case. But only if you file. Do not let fear stop you. Do not let confusion stop you. Do not let procrastination stop you. File your taxes before April 15th. If this video helped you, hit the subscribe button right now. Share this video with every immigrant family you know, because most of them have no idea this money exists. Drop a comment below telling me how much you are expecting back on your tax return this year. This is USA Visa News. Stay informed, stay protected, and I will see you in the next one.